Looking for a way to make your portfolio really sing? Then listen up! Today we're diving into the exciting world of dividend stocks. These babies are the unsung heroes of the investing world. They can provide a steady stream of income. Plus, they offer the potential for some serious growth. So, what exactly are dividend stocks? Imagine a company doing so well that it decides to share its profits with its loyal shareholders. That, my friends, is a dividend. It's like getting a bonus just for being a part owner of the company. Pretty sweet, right? Now, not all stocks pay dividends. Some companies prefer to reinvest their profits back into the business. But those that do pay dividends can be a real game changer for your portfolio. Why are dividend stocks so popular? Well, for starters, they provide a regular stream of passive income. This can be especially attractive to retirees or anyone looking for a consistent cash flow. But that's not all. Dividend stocks also have the potential for capital appreciation. That means the value of your investment can grow over time. Let's talk about the advantages of dividend stocks. One major advantage is the potential for passive income. Imagine this. You own shares in a company that pays a quarterly dividend. Every 3 months, you receive a check in the mail, just for being a shareholder. That's money you can use to pay bills, reinvest, or treat yourself. Another advantage is the potential for capital appreciation. Dividend-paying companies are often well-established businesses with a solid track record of profitability. This can make their stocks more attractive to investors, which can drive up the price. Dividend stocks have historically performed well compared to non-dividend-paying stocks. Of course, past performance is not indicative of future results, but it's still a good sign. Remember though that dividend stocks can also be affected by market downturns. But hey, at least you're still getting paid dividends, right? Now, before you go all in on dividend stocks, let's talk about some potential downsides. One thing to keep in mind is that dividend-paying companies may not grow as fast as companies that reinvest all their profits back into the business. They're like the tortoises of the stock market. Slow and steady wins the race. Another potential downside is the risk of dividend cuts. If a company experiences financial difficulties, it may reduce or even eliminate its dividend payments. That's why it's important to do your research and choose companies with a strong track record of dividend payments and a sustainable business model. Investing in dividend stocks is not without its risks. It's important to remember that dividends are not guaranteed. Companies can cut or eliminate dividends at any time. Don't put all your eggs in one basket. Diversify your portfolio across different asset classes to mitigate risk. So, are dividend stocks right for you? That depends on your individual financial goals, risk tolerance, and investment timeline. If you're looking for a way to generate passive income and potentially grow your wealth over the long term, dividend stocks could be a good fit. But, if you're looking for high-growth investments and are comfortable with more risk, you might consider other options. When evaluating dividend stocks, look for companies with a history of consistent dividend payments, strong financials, and a competitive advantage in their industry. Consider factors like the dividend yield, payout ratio, and the company's overall financial health. Remember, investing in the stock market always involves some degree of risk. Before making any investment decisions, it's essential to do your research, consult with a financial advisor, and invest only what you can afford to lose. So, what do you think about dividend stocks? Are they a smart investment or just another Wall Street fad? Let me know your thoughts.